Good morning, everybody, and welcome to this week's Elite Traders Club weekly analysis session for Monday, the 20th of July. I hope your sporting teams had a win on the weekend. And I've lost my train of thought there as I saw something typed in. And certainly my team did. Hawthorn had a very good win, second week in a row, beating other premiership contenders. But let's not gloat. Two in a row. What's the saying? One sparrow does not make a summer. Two sparrows, well, maybe it does. Three sparrows, we'll have to wait and see. Anyway, a bit of hubris, I think, David. Let's not count our chickens just yet. Let's get underway. Just a reminder, the Academy coming up at the end of August. So if you haven't got your spots for that, please give serious consideration to that. We've got a really, not just a great venue, but a great lineup. Some really, really good topics for extension as well. So certainly, we would love to see you there. The disclaimer before we start: the content of this presentation or any other Elite Traders Club material does not constitute a recommendation, nor does it take into account your investment objectives, financial situation, nor particular needs. So before making an investing decision based on any of the advice presented in any of the Elite Wealth presentations, please consider whether the advice is appropriate in light of your financial circumstances. All right, let's get underway. Obviously, today we're going to have a look at portfolio management, specific setups, and a little bit of Q&A. So first things first, a quick look at the markets here. The Australian market, whilst it did recover a bit last week, and technically is starting to look a little bit better, we are still in very high risk. And as such, we just need to be on our toes, monitoring our risks, certainly making sure that you've got your protective stops in place, not necessarily cramming and jamming or anything like that, but just being vigilant. And if the market continues to move to the downward side, then eventually you get stopped out of positions. But hey, at least you're protecting your capital, and that's the name of the game. In the US, the S&P 1500 has actually moved back strongly enough to drag that benchmark indicator back up above 60 on the stochastic, which therefore puts us into a moderate market risk. And as such, you need to apply a market risk multiplier of 60% over there. And obviously, because we're still very high in the Australian market, a market risk multiplier of 20%. Hopefully, by now, all this material is making sense to you. If not, certainly request a coaching call, and we'll give you a call and explain it in more detail. Assuming that you are splitting your portfolio between the Australian market and the US market, and you are allowed to have a maximum drawdown of 15%, then half of that would be allocated to your Australian portfolio. And because we are in very high risk territory at this point in time, we apply a 20% market risk multiplier to that 7.5% allowable drawdown, meaning that our exposure is down at 1.5%. Conversely, in the US, half of our allowable 15% drawdown is 7.5. To that, we need to apply a market risk multiplier of 80% there, and as a result, that changes our exposure to 6% value at risk. And those of you who are still choosing to scale out at any point along the way, because we're at very high risk in the Australian market, we're looking for targets of 1-to-1. In the US, however, because we are in moderate risk, you're looking at 2-to-1 risk to rewards. Let's go and have a look at the markets now. At the benchmark indices, you'll see the S&P 1500 there on the screen at the moment. Good, strong price action last week. Really, after this very big black candle and then having the pin bar in the opposite direction, was looking a little bit bleak. But since then, very strong price action to the upward side. And as you can see, resultingly dragging that stochastic indicator back up above 60 and putting us back into moderate market risk. Hopefully, if we can get a little bit more consolidation through these particular levels now, and now that we're getting towards the upper side of the box, it would be good to see if we can break out of that, perhaps come back, have a bit of a retest. That would be a very positive sign for the US market, which by and large has really gone sideways for most part of the year. Interestingly, in going through the portfolio on the weekend in the watch list, that there are still quite a number of trades holding up very, very well. Those trades last week that didn't have their stop losses trailed have managed to, in many cases, have stop losses trailed this week. So again, across the watch list there, generally holding up very well, despite what's happened in more recent times with that sort of downward movement. So that's a good sign. And again, that's all based on relative strength, treating those trades in the right way so that they are able to stay in your portfolio as opposed to inadvertently kicking them out by strangling them. And that's not what we want to do. In the Australian market, let's go and have a bit of a look. I'll just compact that legend a little bit, tidy it up. Again, the last few weeks we've been talking about this downward channel that we've been in for a period of time, where price was really just bouncing from the bottom to the upside, to the bottom to the upside. Recently, getting in a level of support through here at the moment, down at around about that sort of 5,400 type of level here. You can see where price has really started to rebound off there pretty strongly. Again, nice strong price action last week, breaking out to the upper side of that channel, which is good. And if we can get some follow through this week, then that should start to drag that market risk indicator back up towards the 60 level. So let's keep our fingers crossed that that happens. Along the way, so just a bit of a recap about the market in the last week. In the ASX, we didn't the previous week. We didn't have any setups last week, and as a result, there were no setups to trigger this particular week. Running the scan across the Australian market this week, I didn't find any new setups, so there was no new setups in the Australian market this week. I did, however, in the Australian market, I found 6 new setups, so we'll go through and have a look at those now, and then what we might do is go through and have a look at some of the trades that triggered in the US from the previous weeks. All right, so let's go through and have a look at the pending trades in the US for this week. So the first one that I came up with was GILD. I'm not too sure how you would pronounce that. Gilead, not too sure. Anyway, let's call it GILD for short. Good price action in terms of last trough forming well above our second from last peak. Number of nice strong white candles through here again, given what the rest of the market's been doing, and as a result seeing good relative strength comparison, and the last histogram bar as well being bigger than the previous week as before. So not just outperforming the index, but its own performance is also starting to increase as well. So that's a really positive sign. So all we need to do is zoom out and see where we are in context, and you can see that we're pretty much at all-time highs as we speak. So all we need to do here is, as a result, is place an on-stop order 2 pips above our last medium-term peak there. And I'll just zoom in a little bit so we can see the annotation there as well. So 2 pips above the high of our last medium-term peak, we'll have an on-stop order at $123.39 with a limit 1% above that, which is at $124.62. Protective stop outside of 2 ATRs and at least 0.5% below our last medium-term trough has our protective stop coming in at $118.84. Let's have a look at the next one on our list. Goldman Sachs. This is the second setup that Goldman Sachs has presented us. This was the first initial setup when we had a breakthrough of this previous medium-term peak a couple of months ago. Since then, has moved nice strongly to the upside, remembering that in many cases we do happen to get a retest of our breakout levels. Certainly the fact that the market had a bit of a pullback has made that retracement perhaps a little bit stronger than it may necessarily have been. But as such, we do have a new setup. So what I'm going to do is I'm just going to put on the new setup analyses on there just so we can see that. This green line that's been drawn in here, it is a long-term peak, so let's just zoom out and see where that is. It's back pre-GFC time, so it's quite a long time ago now. But still a relative point, because there will be people who've inadvertently held onto this all the way through, hoping that it was going to come back, and eventually it has, not that they always do. In terms of our price action, last trough at or above our second from last peak there, so let's just go through and make sure that that's the case. So the high there is 202.87, and the low there is 203.20. So that low certainly coming in above that last medium-term peak. So we've just got to wait for the breakout. So as such, an on-stop order at $218.79 with a limit to $220.97 and a protective stop at $202.18. You'll see that now that particularly the first trade having broken out, that has started to drag the 3 ATR up to the upward side, which is good. If this does happen to break out above this level, then as a result, it'll start to drag that 3 ATR back up above the initial, well, certainly above the initial protective stop on our first order that we had, which is a good thing. Next one on the list, LGF, Lionsgate Entertainment. Again, as you can see, the price action, new trough that's just been formed. So obviously the short-term trend moving to the upward side. Good relative strength starting to increase as well. So nice shallow retracement, nice candles, nice follow through last week, giving us a new setup. Last trough well above second from last peak, last medium-term peak. So price action looking really good. In terms of where are we in relative terms, well, we're pretty much at all-time highs here. Coming up to this old, last longer-term peak, major point of supply, coming up to that level now. Certainly having a good test of that the previous week through this level. Nice retracement, and we've just got to wait for the breakout. So let me just move that value line out of the way. So as such, an on-stop order at $38.27. with a limit to $38.65 and a protective stop 2 ATRs away at least, and at least 0.5% below that last medium-term trough has a protective stop at $34.65. Just for relevance sake, from last week we had some discussion points around the use of the ATRs, and what I've done for consistency purposes is I've used the 1 and 2 ATRs, which are part of your overlays. So we did speak with Beyond Charts and asked them why is there a difference between the 1 and 2 ATR overlays that we've provided them and their own ATR calculations, because they're based off exactly the same calculations, and they couldn't quite provide a relevant answer. So to keep things nice and simple, I'm just going to use the 1 and 2 ATRs that we've provided, which are exactly the same ones that you'll be using as well. So that should avoid any confusion there. So that was Lionsgate Entertainment. Next cab off the rank is MetLife. So what I might do is I might just remove this value line, get him out of the way. And again, as we can see, a trough that's recently been confirmed. Now that we have a short-term uptrend in place, our trough is at or above our second from last peak. We do need to make sure that we are clear of any long-term peaks, which are obviously major points of supply. We do have one way back in middle of or towards the end of 2007, early 2008. So that's something to be wary of in terms of the structure of the trade. So just wanting to make sure that we've got at least 1-to-1 up to that particular level. And we do, and you can clearly see that on the chart. So as such, we just need to enter 2 pips above the high of our last medium-term peak. And as such, our order becomes on stop at $58.25 with a limit to $58.83 and a protective stop outside of 2 ATRs and at least 0.5% below that last medium-term trough, and the stop comes in at $53.68. That's MetLife, MET. Next one, Trip. I feel like going on a trip. I keep seeing those river cruises down those European rivers at this time of the year with the sun shining, and it looks very, very tempting. TripAdvisor, a good place to find out about some of those trips and some of the feedback. So here we have set up on this particular stock, just checking in our price action. In terms of the last trough, well above our second from last medium-term peak, so price action is nice and strong through there at the same time. We do have a major point of supply through this particular level here, certainly having our first test of that level and starting to move upwards as well. The only thing we do need to be mindful of is a major point of supply coming through at around that $111.40 odd cents. But prior to that, we certainly do have room there in terms of 1-to-1 at the very least. So our on-stop order for this particular trade is at $92.79. I'm just going to do a quick check on that because that's 92. That one there is 92.75. So again, another example of a trade that has moved beyond its relevant medium-term peak. However, it hasn't moved more than 1% above that level. 1% of the high at 92 would have us at 92.92. So you'll see that our limit is actually up to 92.92. We're entering 2 pips above the high of this last candle. So the high there, 92.75 is the high. So our on-stop order should be 92.77, not 79. So let's change that and make that 77. There we go. So on-stop order at 92.77 with a limit to 92.92. Our protective stop, remembering, has to go below that last medium-term trough and outside of 2 ATRs as a minimum. And our protective stop therefore needs to go in at 81.98. That's TRIP, T-R-I-P, TripAdvisor. And I think this one is the last one that I managed to find, and then we'll, because we don't have any in the Australian market, what we might do is hand it over to you guys and see if you've got any before having a look at some of the trades that triggered during the course of last week. VRTU, Virtusa Corporation. Again, nice price action. A lot of white candles in particular over recent times. So, very good relative strength. Having a little bit of a pause during the course of the previous week. So, relative strength just coming down a little bit. So, its own performance just deteriorating a little bit, but still clearly above that of the benchmark. And then last week, obviously turning around, moving up strongly. And again, the relative strength comparison increasing this last week over the previous week. So another good sign. All we've got to do is wait for a break of our medium-term peak. But let's just zoom out and make sure that there's nothing overhead in terms of resistance. Doesn't appear to be. We're at all-time highs. So as such, with good price action, ticking the boxes on our price action filter, we have an on-stop order at $52.06 with a limit 1% above that at $52.58, and our protective stop 2 ATRs away at the very least and well below that last medium-term trough, and the protective stop coming in at $47.62. So that's all I was able to find on the US market. If you've got any suggestions there, absolutely love to have a look. Just going to read through my notes there. Darren found PME on the ASX. So let's go and have a look at that one. PME. Pintang Marine Enterprise. Sorry, no, that's not the one. It's Pro Medicus. Sorry, just opened up the wrong one. That was on the US. We'll close him down. Go back to him and that one there. All right, so let's just zoom in a little bit, and then what we might do is go in and put on our swing chart so we can see. And let's have a look. All right, so what we're looking for here, obviously, major point of supply at the top end. And let's just, we can use that. Up at that level there at the moment. So we've got obviously a major point of supply there. In terms of our price action, So what we're looking for is last trough at or above second from last peak. So this last trough, is it at or above the second from last peak? Well, let's put on our value line and go through it. So the high there coming in right at that level where I've drawn that line is $2.17. So we want to make sure that that previous trough is above $2.17 and the low is at $2.17. So that would tick the boxes in terms of the relevant price action. However, from that particular point, what we'd be looking for obviously is a breakout above our last medium term peak, which has already occurred a couple of candles afterwards. That candle there breaking through and that one as well. So that one has already sort of moved up and beyond. If you were able to grab that one on the breakout above that particular level there, Darren, then absolutely taking a trade through there, meeting all the criteria. Certainly just making sure that in terms of where your protective stop is, below your most recent medium term trough there. So let's just neaten that up. I'll get rid of him. Delete him. Let's just pop in a line there. So as an example, if you had seen that, Darren, as a particular setup and making sure that your protective stop was at least 2 ATRs below the entry point and below the last medium term trough, you certainly did have at least 1-to-1 up to those higher levels. So certainly something that you could look at. A few black candles and things like that, not quite as clean as some of the other ones, a little bit gappy, but still would tick the boxes in terms of setups. Let me have a look. Oh, yes, Darren, you're absolutely right. And he's pointed out quickly, and I should have had a look. I was on the daily chart. So we had a set up on the daily chart a few days ago, and let's have a look at what we've got here. Absolutely. In terms of trough, last trough at or above second from last medium term peak. Certainly is. Absolutely. And so as such, all we need to do is let's put on a template and let's go through this particular one. That's the one. So let's come on, Beyond Charts. Apply my overlay. I know you can do it. There we go. Yeah, good price action through there, Darren. Well picked up. Not too sure why it didn't come up on my scan. Good relative strength. So absolutely. So let's go through and do the numbers on this one. Let me just zoom out. Yep. Perfect. We're at all-time highs. So let's go through and pop this one on. The high there at 239, which is higher than the previous one. So we're going to have an on-stop order at 241. So let's go through and put the annotation on. On stop at $2.41 with a limit to, grab my calculator out and bring him over. So 2.41 multiplied by 1.01 gives us $2.43. There we go. To $2.43. And our protective stop, we need to make sure 2 ATRs. There we go. Nearly. Last one there is 21.7 cents. So let's call it 22 cents. So 22 cents, $2.41, our entry level. 2.41 take away 0.22 equals $2.19. Now let's see whereabouts that is. And let me just put on our horizontal lines. Let's put on 2 of them there. So the first one was going in at 241. 2.41. And let's colour that in blue. And we'll apply him. The other one was down at 219. So let's see where that is in respect to the last medium-term trough. 219. Yep. So let's go through and see where that is. And at this point in time, it's above that, so we need to defer to our medium-term trough. So let's see what our medium-term trough is. Our medium-term trough, the low point there, you can probably just see that it's $2.10. So we need to, as a result, 2.10. We need 0.5% off that, so multiplied by 0.995 gives us $2.08. $2.09. Yeah, $2.09. Let's round it there. So $2.09. 2.09. Let's change our colour. Put him in red. Perfect. All right, that looks very good. So let's just put our protective stop on here. Our stop at $2.09. Fantastic. Very good. So what I'll do, I'll add that as an analysis for the watch list this week. And when Beyond Charts decides to come up with that new analysis, I'll just have a sip of my cup of tea. There we go. And I'll set that as the default as well. I will also add that to a watch list. Again, when Beyond Charts allows me. So just by clicking on this little watch list icon, I can either add it to an existing watch list if I don't already have one made up, or I can create a new watch list when that pops up in good time. So whilst I'm waiting for that, I'll have a look at some of the other questions there. Okay, and Kim found one there on the US. Here we go. Okay, so I don't have a watch list for the Australian market this week, so I'm just going to call it ASX July 20. And that's now gone into that particular watch list. So, all right, very good. So let me see. Okay, Kim had Massimo, M-A-S-I. So let's bring that one in. M-A-S-I. And bringing up that one, that watch list. There we go. All right, so let's just go through and pop on our swing chart. And let's have a look. Yeah, it looks pretty good to me. I'll just zoom out. And looks like we're above everything all out there. So, yeah, excellent. Good job. Kim, when you picked that one up, did you pick that up from the loose scan, tight scan? Can you remember which scan you used to pick that one up? But yeah, it looks really good. We've got a new trough that's been put in well above last medium-term peak. So, again, great relative strength along the way, performing very, very strongly. So certainly we've got a setup on that one. And let's go through and put the lines in. All right, so our on-stop order, according to Kim, let's go through and check. On-stop at 39.93, 39.93. We'll just make him blue. So that's in there. Let's just check. High there, 39.31, so 39.33. Smack bang. And Kim, do you have the protective stop on that one? Save me a little bit of work. Or we can go through and work it out at the same time. Last one. Last candle. Beyond Charts. There we go. $3.36 is 2 ATRs. So our on-stop order was at 39.39. And as Kim's talking away, as I'm typing away here, I can see Kim's got his protective stop in there at 36.56. So let's just do that. $39.39. Take away $3, 3.36. 36.03. Now, did I do that right? 30 on stop order. 39.39. Take away $3.36. Let's do that again. 39.39. 39. No. That's from up there, David. 39.93. Let's do that again. Clear. 39.93. Take away. It was $3.65 minus 3.65 equals 36.28. Kim, you got 36.56. I rounded up the ATRs to $3.37. $3.37. Okay, so let's do that again. $3.37 is, that's 2 ATRs. Our entry is 39.93. 39.93 minus memory recall, $3.37. 36.56. Did we get there in the end? 36.56. Fantastic. We got there in the end, folks. 36.56. Well done. 36.56. Let's mark him in red. And quite clearly below that last medium-term trough as well, which is exactly what we want. So let's just get rid of our value line there. That's awesome. So let's, now the other thing I've got to do here, I've got to be very careful of this because you'll see the little arrows on the side of the chart there for me to drag this down and put the annotation in. Because the little arrows there are right on my horizontal line, as soon as I go dragging that down, it's going to change the numbers on my setup. So I'm not going to do that. I'm just going to type it in down here. On stop at, oops, wrong number, David. 39.93. Limit 2. Do we have a limit on that one, Kim? I'm just going to put in the stop down below. Stop at 36.56. 56. Alright, so let's do the limit on that one. 1% above. 39.9. Sorry, 39. Yep, 39.93 times 1.01 equals 40.32 to 40.32. So just pop that one in. 40.32. All right, save him as an analysis. Well, that was quick beyond charts. And I've set that in there as my default. So that one will certainly go on the list, and I'm just going to add that to the July 20 USA. There we go. All right. What else did we have? Yeah, John mentioning about PME liquidity. Yeah, look, a little bit gappy. I think that's certainly one that you'd have to go through and just check on that one. WFC in the US, a big bank I would like to own. WFC. Let's go through and have a look at WFC. That's from Ken. Right, let's move that watch list manager out of the way. Let's just zoom in a little bit. Let's just check our price action. Let's put on the swing chart and have a bit of a look. Price action on this one, Ken. Again, this one would fail the price action test on the basis of this last trough coming in at or below that second from last medium term peak. So it's something, and again, I just want to make sure that I'm on weekly, which I am. So in terms of price action, would negate that particular setup. Certainly a big strong candle of last week. used the tight scan. Okay. All right, what else have we got here? Yep, okay, no problems. All right, I don't have any other questions, folks. So what we might do is let's go through and have a bit of a look at some of the setups from the prior week. So this was last Monday morning. You might remember BMRN was the last one that we had a look at. And that was a trade that triggered really clearly last week. So again, in terms of relative strength, had been outperforming for quite a period of time. Previous week showing really good internal relative strength, so its own performance increasing as well. So not just beating the index, but its own performance ratcheting up as well, which is a really positive sign. And really nice candle last week. So that was one that triggered in BMRN. The other ones on the list are triggered in. Casey also triggered in as well. DG triggering in. EBS triggering in there. So obviously at some point, moving down, opening up, moving down during the week and closing up towards its high. So nice candle on that one as well. On EBS. FISV triggering in. Again, I mean, the sorts of things that you'll see over a period of time is just the number of white candles in a setup as well. So again, contrast that against the broader market. Again, a lot of white candles in this one. This one did actually trigger. Not the best candle last week. Pretty much a doji on that last candle. High 108.19. And we had a non-stop order there at 107.83. So that one triggering in. Let's move our value line out of the way. Other ones triggering, Leggett Platt. Yeah, it would have been nice to see a bit better finish to the week on that one. Again, still quite a lot of white candles in that particular one there. Netflix, not too sure whether any of you got on that last week. I think that had some earnings out as well, but that triggering early in the week and being a very strong candle on that one. So already as a result, dragging that 3 ATR line up, beyond the initial 2 ATR stop that you had, and moving up really, really nicely. So nice, strong start to the trade on that one. Click. Gapping up a little bit there, and then triggering us in towards the mid part of the week there. Target hasn't triggered in yet, so we'll just have to wait and see what happens over the course of this next week. VR, not yet triggered in. But Starbucks certainly did last week as well. So that was all we had in the US from that previous week, and those ones there that triggered in. So hopefully if you had any room in your portfolios in the US, you might have been able to squeeze one of those in. You may in fact still be in some of those trades that you've had in your portfolio for a while. Hopefully they're holding up well, and with the strength of the market over this last week, that it starts to put a bit more green on your screen as well. Any other questions, folks? Let's have a look. Ken says, interesting, Saxo divided the price by 7 on Netflix. Not too sure what your next comment means there, Ken. You says, I had $44,000 profit in about 12 hours, so I'm not I'm not too sure what that means. As for a discussion point, says Kim, lamenting the fact I didn't get into Sketches SKX last year, due to not being able to get in with the round number rule. So let's go and have a look at SKX. I actually went to Sketches. They make shoes. And SKX. And I almost bought myself a pair of these on the weekend. I went down to the local DFO. Wow. That's certainly a very nice looking chart. Let's put on the swing chart. And let's just zoom in a little bit. And I'm guessing probably a breakout somewhere, just looking at it. Oops, let me just drag that through as an example. Somewhere through there, really nice price action in terms of trough compared to second from last peak. And even the following trough, the subsequent trough that it put in compared to the second from last peak, coming in at around about those levels. And yeah, round number there, suggesting, look, we can't take the trade because we're too close to the round number, weight, etc. And that's gone from $70 up to $120. So that's certainly a very nice return, somewhere around the order of what's that? Probably about 80 odd percent on that particular trade, and still going very, very nicely. And if you were to put your 3 ATR on that, wow, even that, at $104, $105, you've still banked lots and lots of profit in there. Yeah, great result. Some stocks, you can look at different stocks and see that sometimes they do have a relationship with round numbers, sometimes they don't. I think the opportunity there, if, at the end of the day, it's all about risk management, and you know how to manage your risk, you know how to set your parameters. And obviously the market really likes this, and yeah. But hopefully, Kim, on the other side of that, you've got some other ones in your portfolio that are, starting to add lots of green in there along the way. I know you've produced a few in the last few weeks that we've had a look at. So hopefully we don't dwell on ones like these too much. Hopefully through managing your trades, each and every one of you, that you allow these sorts of trades to be in your portfolio, and to, at the same time, to manage them appropriately. Because if we had got in around $70, we would have been potentially having a target of $80 to scale out, and then maybe $100, and we're up at $120 as well. So certainly your best trades do take time, and you've just got to allow yourself to nurture them and let them become the trades that they can be. All right, PME. We'll go back to PME. A couple of questions about that one. Just whether or not the volatility of this particular stock. It is a bit gappy, and you'll see that the trading over, this is a chart on a daily perspective, so it is a bit gappy. So probably just something to be a little bit mindful of there in terms of how you would place your orders, and perhaps one to rather than placing on-stop orders and those sorts of things, just being wary with how you're choosing to fill your portfolio with that one if you're looking to add that to your portfolio. All right, that's about it, guys. I'll go and put those last couple into the watch list, which I should have up and published certainly before lunchtime today. But you've got the entry levels on the screen there as well. So if you're in any of the trades that are in the watch list, don't forget to go through and check any stops that have trailed. We did have four stocks in the Australian market that we trailed stops on last week, and in the US there were 23 stocks that had trailed stops on them. So good luck this week. Let's keep our fingers crossed that the market continues in the upwards direction and gives a bit more strength back into those portfolios. But just keep doing what you're doing, managing those trades in accordance with your trailing stop rules. And we will catch you either at the education session or live again on next Monday morning. Till then, bye for now.